More drivers than ever are purchasing plug-in electric vehicles, whether for their environmental benefits, performance, or lower cost of ownership. Extended vehicle range and a proliferation of vehicle charging stations has made range anxiety largely a thing of the past. As part of the recent Inflation Reduction Act, the existing credit for purchasing electric vehicles was extensively modified, making it easier for some purchasers to claim the credit, but harder for others. I'm the Tax Geek, and here is the Clean Vehicle Credit, oversimplified. I've already mentioned the new Clean Vehicle Credit in 2 previous videos on this channel. This video is a more in-depth view of how the credit works, which vehicles qualify, and which purchasers qualify. This credit is for vehicles purchased from 2023 forward. If you've purchased a new EV before 2023 and haven't yet taken the credit, you can watch my video on the original plug-in electric vehicle credit by clicking the card above or the link in the video description. The revised Clean Vehicle Credit is available for both new and used vehicle purchases. This is intended to make EVs more affordable for people at lower income levels. Let's take a look at the changes from the original plug-in electric vehicle credit to the new Clean Vehicle Credit. For new vehicle purchases, the credit itself is largely unchanged. It is a non-refundable credit of up to $7,500 for the original purchaser of a new plug-in electric or fuel cell vehicle. Just as with the old credit, qualifying vehicles must both have 4 wheels and be capable of being driven on any public road or highway. This eliminates e-bikes, e-scooters, and golf carts from eligibility. The credit is primarily based on the vehicle's battery size. In addition, certain critical minerals used in the manufacture of the vehicles, as well as the batteries in the vehicles, must be sourced in North America. Eligible vehicles must undergo final assembly in North America as well. Plug-in hybrid vehicles do qualify for the credit as long as they have a sufficiently sized battery. Non-plug-in hybrid vehicles do not qualify for the credit. The credit is available to vehicles with a manufacturer's suggested retail price of no more than $80,000 for vans, sport utility vehicles, and pickup trucks, or $55,000 for all other vehicles. It does not matter what you actually pay for the vehicle. For example, if you purchase an SUV with an MSRP of $83,600 and a negotiated price of $79,250, your purchase does not qualify for the credit. Under the original plug-in electric vehicle credit, once manufacturers had produced over 200,000 qualifying vehicles, the credit was no longer available for vehicles purchased from that manufacturer. These production caps have been eliminated. Manufacturers can make as many qualifying vehicles as they want, and their customers can claim the Clean Vehicle Credit. Because of these criteria, the IRS, in conjunction with the U.S. Department of Energy and the EPA, has compiled a list of eligible vehicles and the maximum credit each vehicle qualifies for at fueleconomy.gov. Check this list before you purchase. Do not rely on a salesperson's claim that a vehicle qualifies for the credit. To claim the credit, you must have a modified adjusted gross income of no more than $300,000 for married couples filing jointly, $225,000 for taxpayers filing as head of household, and $150,000 for all other filing statuses. You can use your AGI from the year you purchased the vehicle or the year before, whichever is lower. Now let's take a look at the Clean Vehicle Credit for purchasing a used vehicle. This credit, also non-refundable, is 30% of the purchase price with a maximum credit of $4,000. Eligible vehicles are any plug-in electric vehicles with a battery capacity larger than 7 kilowatts. The sourcing requirements of the Clean Vehicle Credit for new vehicles don't apply here. Vehicles must have a gross vehicle weight of less than 14,000 pounds. That's 6,360 kilograms if you're not watching from the United States. Vehicles must have a model year at least 2 years before the current model year. For 2023, 2021 model year vehicles and earlier are eligible. And the selling price must be $25,000 or less. Eligible buyers must have adjusted gross incomes that are no more than $150,000 for married couples filing jointly, $112,500 for head of household filers, and $75,000 for all other filing statuses. Just like the credit for new vehicles, you can use your AGI from the present year or the previous year, whichever is lower. You can only claim the clean vehicle credit for purchasing a used vehicle once every 3 years. To qualify for the credit, both new and used vehicles must be purchased from a dealer. Private party sales of used vehicles do not qualify. Dealers will report all eligible vehicle sales to the IRS. If you attempt to claim the credit using a vehicle identification number that was not reported as being sold by a dealer, the credit will be denied. Just as before, the credit will be claimed on Form 8936. As of the publication of this video, the IRS has not yet released a draft version of this form. Later in 2023, expect a follow-up video on how to fill out the form and claim the credit. And that is a basic oversimplification of the new clean vehicle credit, which should give most buyers the information they need to see if an EV is a good fit for them, at least from a financial and tax perspective. If you want to know more about the actual EV ownership experience, check out 2 of my favorite YouTubers, Robert over at the channel Aging Wheels, and Alec from the channel Technology Connections. Both these young men have made extensive videos detailing what it's like to own and drive EVs. They know much more about this subject than your tax geek. Please like the video if you found it informative, and share it with anyone else who could find it useful. Subscribe to the channel, if you haven't already, for additional oversimplifications of our complex tax system. And of course, your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.